we have a huge cornucopia of possibilities. I mean, I've all gone into this cauldron of environmental products. Let's just call it that very briefly, all around the carbon base. We've got the whole concept of hydrogen-based stuff, etc., etc. Now, where are we in terms of then, are we headed towards managing to get a single carbon price? I mean, we said we're on the road to a global carbon price, but does that actually come out as one single price in the end, Gordon?
That's a very good question, Patrick. It would be great if we had a single carbon price, and the way we would deliver a single carbon price is through a global cap and trade program. And because the great thing about a cap and trade program is, although you get a price out of the end of it, you actually control the quantity of emissions. So if you emit, you have to go and acquire your permit to pollute. If you don't, then you get fined, but you don't get off getting your permit. You still got to go and find it. So you either need to go and get the permit from somewhere else, or you effectively have to abate. So it controls the quantity of emissions, and carbon cap and trade is really, as far as I can see, the only tool that controls the quantity of emissions. The other great thing that a cap and trade does is it allocates the ownership of the ton. So it's a polluter pays model. Who owns the ton, has to account for that liability and buy that allowance. We got fairly close to a sort of a global price of carbon under phase 3 of the EU ETS, because there was something called the Clean Development Mechanism, which was basically a UN mechanism to value project-based credits, like we were talking about earlier today. It was Steve. They're now called sort of voluntary carbon markets, but there was a UN program called the CDM, and the currency of the CDM was a certified emission reduction. So when people are talking about voluntary carbon credits today, whether it could be a VCS or gold standard or ACR or CAR, the CER was effectively an equivalent of those. And the European Community, European Commission under the ETS allowed compliance entities in Europe to buy CERs to meet part of their compliance obligation. So it was, say, 10%. If you emitted 1 million tons, you could buy 100,000 tons of CERs. And so what did that do? It immediately created a demand pool for these project-based credits, but it linked its value to a liquid compliance market. And so they traded as a spread. So you effectively had one price because the pricing was linked to the compliance ton, but it was linked to the compliance ton because it was allowed to be used. That decision was then reversed under phase 4. So we're living in a world where it doesn't seem like there's a big opportunity to link a carbon credit to a compliance ton. So it's really the industry corporates are going to have to, we're going to have to build a sort of a price for an international carbon unit through something like the voluntary carbon market. I think we're going to have to wait a little bit longer to see Article 6 come into action, although we got a good result out of COP26. I think we're a few years away from Article 6.2 and 6.4 coming into action. So therefore it's basically commerce, or what's called the voluntary carbon market, is going to create a price for these project-based credits. So I don't necessarily see there ever being one price, but increasingly the prices will become more correlated, I think. It'd be interesting to hear what Steve thinks.
No, I agree. I don't see the idea of a core carbon price, and we talked about all the time in the task force and scaling voluntary carbon markets. And I just don't see how we can. I can see how we can have reference prices for certain subsets, but I agree with you. I just, in theory, there should be a price of carbon, but the variance is just too big on the ways markets work.